I can vividly see that a lot of traders has been finding it difficult to spot supply and demand zones in the financial market graph, right? So in this video, I'll be showing you guys how to spot strong supply and demand zones. Okay, so with no further ado, let's just delve in. So as you can see this pictorial reference right here, as you can see this illustration right here, we can see we have a breakout here. You already know that this is a breakout to the upside. Okay, so then we have our supply, our demand zone is right here. So all right, our demand zone is here. So immediately we have another breakout here. I know you guys should have outgrown all these stages, so I don't need to be talking a lot about it. So immediately you see markets displacing the recent cemented high to the upside in the buying trend. Then we have another supply zone here. So what are you going to do? You just need to wait for price to come back here, then you buy your market to the upside again. That's just how it is. Okay, it is just as simple as that while you are buying. All right, so if the market is selling, you already know we have a breakout here too to the downside, which is very obvious. Then you already know that your supply is going to be here. All right, your supply zone is going to be in that side. Then immediately you see price breaking out again to the downside, you already know again your supply zone is going to be somewhere here. All right, okay, so when you see price breaking from the recent low again, you already know since market is ignoring this supply zone, then you let the market break. You leave the market and let it go. Okay, don't rush, don't do FOMO. Okay, so immediately you see market breaking this low again, then you mark your supply zone again. You wait again for price to come to it, to come back to it. All right, you wait for a correctional phase like this, and if price is still not coming, it happens, price might not come back to it again and break. Yeah, it happens like that on the chart. Mark another. All right, just mark another supply zone like this. Then you wait for price to come back to it again. If price come back, then good luck, then you sell again to the downside. All right, so it is as simple as that. Okay, it is as simple as that. If you are marking your demand zone, that means the market is bullish, and if you are marking your supply zone, that means the market is bearish. All right, so we are going to be looking at the live chart, like maybe 1 or 2 pairs. Then we're just going to see an example of this, then you can see too. Okay, so let's go to the live chart. Let's see what's up. Okay, according to this chart, let's look for, you can use this thing on any time frame. Okay, but for high probability trades, using higher time frame is going to be preferable, right? So it's going to be preferable. As you can see here, this 2 hours time frame on EUR card. Then we have a breakout here on this current live chart. As you can see, we have that breakout. Then we have our supply zone here. Don't forget, let me zoom it for you guys. This is a supply zone. All right, this is our supply zone. You guys know what a supply zone is, right? With this video that you are seeing now, I hope you guys can really identify what a supply zone is. Okay, so this is our supply zone. All right, as you can see, the market came back to it. Then you can see immediately market sold again to the downside, targeting this external range liquidity. Okay, targeting this external range liquidity, easy peasy, no stress. So if you're that kind of aggressive trader, you're gonna place your sell limit here, your stop loss above the high, then you target the external range liquidity, easy peasy, no stress. That's how it works. All right, that's how it works. But if you're that kind of conservative trader, then you go to your lower time frame, probably 15 minutes, to look for an entry. Okay, you go to your lower time frame like this. So you look for an entry, you look for change of character or market structure shift, or change in state of delivery, whatever you call it in your region is fine. All right, so just wait for market to switch trend. Okay, so as you can see here, we have this choke here to the downside here, then we have this BOS here to the downside. So if you want to sell, you can sell after this choke, or you can sell after the BOS. All right, so if you want to sell after the choke, we can see we have a fair value gap here. All right, so this is going to be our supply zone on this 15 minutes time frame. This is going to be our supply zone here. Then if you want to sell, you just place your sell entry yeah, then your stop loss is going to be above the high of the 15-minute high. Easy peasy. Then you target wherever you are targeting, which is external range liquidity. And if you're that kind of trader that doesn't really like to stay long in the trade, you can target internal range too, okay? But more preferably, as far as history is concerned, you can just target the external range liquidity, something like this, and it is fine. Can you see? If you are that kind of conservative trader. But if you're an aggressive trader, you are going to be entering on your 2 hours time frame. Immediately you would have placed your sell limits, your stop loss above this high right here, your stop loss above this high right here, then you target this side. So that's how to trade the supply zone. Because the market is selling, we are trading supply zone. Okay, so it is just as simple as that. And if you can vividly see again, let's go to 2 hours back. Let's go to 2 hours time frame again. If you can vividly view what is happening currently, you can see we've seen another break of structure. All right, we've seen another break of structure right here. All right, this is another break of structure. Then you already know your supply zone is going to be where. If you can't really see it very well in 2 hours, you can go to another higher time frame like 4 hours for you to be able to see your supply zone clearly. As far as I'm concerned, all these places has been mitigated, but notwithstanding, this is your last high. The market must not break. If market break it, then the market is changing trend. So it is better for you to just wait for price to come to somewhere here, then you look for a sell again to the downside, because I'm seeing this as a liquidity. All right, that's a liquidity. Okay, so market is going to come there, clear this liquidity out, then when you see a change of character, you can sell to the downside. Or probably if you're that kind of aggressive trader, like I said, you might look for a fair value gap or order block or whatever. Still your supply zone. Whatever you look at is still your supply zone. This is 8 hours time frame now. This is our 8-hour time frame. I know some people is gonna mark it like this. We have our order block here, which is our supply zone. I don't need to be talking about order block. This class is all about supply and demand forex strategy. Alright, so this is our order block here. Sorry, this is our supply zone here, right? So you just place your sell limit here, then your stop loss above the high, then you target the same thing, your external range liquidity. It is just as simple as this. Okay, that is if you are an aggressive trader. Okay, these are supposed to be. So because I'm expecting price to clear this liquidity out. All right, this is liquidity, market needs to clear it out, so entry is going to be there. All right, so entry is going to be there. That is if you are that kind of an aggressive trader. All right, so entry is going to be there. Okay, so but if you are that kind of conservative trader, you need to wait for price to come back here first. So come back to your entry first and see what the candlesticks are doing. All right, see what the candlesticks are doing before you sell to the downside. So that is just it about that. So let's look for another kind of example real quick. Let's look for another kind of, this is 8 hours time frame. Let's go to 2 hours again. Let's go to 2 hours time frame again. Let's check. All right, I think I'm seeing something right here too. So we have a breakout here on these 2 hours. Make sure the candlestick closes. Very, very important. Then we have this low. This is our last low. As you can see, we have this low here. So this is our last low. Then what happened when market broke out from this high? We have another block. So we have a supply zone rather. Don't mind me saying another block, okay? We have a supply zone. We have a demand zone. The market is buying right here. We have a breakout to the upside. So the market is buying. So we have a demand zone here, not a supply. When you are selling, it is a supply, but when you are buying, it is what? It is a demand, okay? So we have a demand zone here, all right? Very beautiful demand zone is right there. But don't forget, this is our low, protected low, okay? Because this is a demand zone doesn't mean you should be placing your buy limit here, then your stop loss is going to be here. No. You don't put your stop loss here. You can easily be wicked out by the price action. All right, so if you are that kind of an aggressive trader, then your stop loss is going to be below this low, then you target the external range liquidity. That is how it works. But if you're that kind of a conservative trader, like I said earlier on, you go to the lower time frame, you wait for or change the state of delivery, then you execute your trade. It is just as easy peasy as that. So let's see in 10 minutes if you are going to see a kind of confirmation entry right there. All right, don't forget this class is all about supply and demand forex strategy. So let's check. I hope we see that side. I hope we do see that side. Okay, I think the side is kind of loading. All right. All right, so when price make a pullback to our what, to our demand zone, what do you guys see? If you can vividly see, you can see that we have been seeing shift to the downside, shift to the downside. Then this was our last shift to the downside. But what happened there? This candlestick, this candlestick broke out from this high. So that's a choke. That is the confirmation entry that you need. Okay, that is the confirmation entry that you need. So that is just it. Then it's so unfortunate that price did not give us a pullback, because you should be buying from here. We have fair value gap right there. All right, we have another kind of demand zone right there. So you should be buying from that side. Okay, then you should be targeting wherever you want target. But unfortunately, the price is not coming back. So probably as a supply and demand zone trader, you might miss this trade. All right, you might miss this trade because price, after breaking out from this high to this side, normally you're supposed to see a pullback to here, then you buy again to the upside. But unfortunately, price didn't do something like that. Okay, price just made a pullback to here, which is not coming back to somewhere here, as you can see. So you might miss that trade. It is fine to miss a trade. Missing a trade is still better than losing a trade. Okay, so it is fine to miss the trade. All right, so you just wait for your setup. Don't forget, this is a supply and demand zone forex strategy for sniper entries. Just stick to your strategy. Okay, don't complicate it. Just stick to it. Since market is not giving us a pullback to this side, then it is fine. Let it slide. Just let it go. So it is just as simple as that. I don't know if you can still see another kind of example. Let me go to 2 hours time frame again. Maybe we're gonna see another kind of example, right? Maybe we're gonna see another kind of example. uh don't forget, this is just unfiltered analysis with me right here. So we guys are looking at it together and we're analyzing it together. So nothing more, nothing less. All right, it's an unfiltered analysis. I'm showing you guys how it is straight up from the chart. Okay, so I think we have a breakout here. We have a breakout here. Then we have another block here too. All right, we have another block here too. So if you're that kind of aggressive too, you can buy from this, you know, from this demand zone. Your stop loss below this right here. Then you target this external range liquidity. That's how trading works. All right, that is how trading works. And if you're that kind of, if you're that kind of conservative person, if you're that kind of person, let me inscribe that place. Let me go to 30 minutes or 15 minutes. Let me go to 30 minutes first. So if you're that kind of conservative entry guys, so just wait for price to shift structure, then you execute your trade from there. All right, so I think this is the place. I think this is the place. Okay, as you can see, we have a breakout here on 30 minutes. Then what else can you see, guys? You can see a choke again. Let me delete this. You can see a kind of a choke. So we have this choke now to the upside. And as you can see very well, let me take away this. Let me take away this. As you can see very well, as you can see on this 30 minutes very well, after this choke, what happened? What happened after this choke? Don't forget, this candle closed. We have a very little, we have a very little unmitigated zone within this candle. So since you see that candle close, this is going to be our buying zone. Then your stop loss below this low. Then you target wherever, then you target wherever you want to target. Just like I said, external in liquidity, whatever is okay, it's fine. Okay, So that is just how it is. Just make sure your stop loss is below the low of the choke or of the change in state of delivery, just like this. So that is it about that. Let me check one more here before we round up the class, before we round up this video. Let's check deriv. Let me check volatility 10. Let me check volatility 10. Let's go to 2 hours time frame too. Let's see what's happening. Let's see. You just need a breakout. That's all. Just look for a breakout, okay? I think we have a breakout here too. Somewhere here, we have a breakout here. As you can all see, we have a breakout here. Just look for a breakout. Just look for a breakout. So according to this one, the market is selling. Just mark your supply zone. This is a supply zone now. Yeah, so if you are that kind of aggressive, like I said, put your sell limit, your stop loss above that high, then you target the what? The external range liquidity, something like this, and that's okay, that's fine. All right. But if you are that kind of conservative trader, then you go to your lower time frame. Let me inscribe that side. Let's go to 15 minutes. Then you look for change of what? Change of character. All right. So you look for change of character right there. I hope we see that side. I hope we see that side on trading. That place is not showing. Okay, let me go to 30 minutes. It's still the same thing. Either you're using 15 minutes or 30 minutes, the price is still gonna print the same thing. Okay, so this is 30 minutes time frame. So let me just zoom out. So as you can see, when price came back to this other block, like this supply zone rather, we have a choke. This is our choke. So price give us a choke here. As you can see, price give us a choke here. As you can see, let me move away this. Price give us a choke here. Now how are you going to sell? You look for what? You look for another supply zone. We have a supply zone here, and we have another supply zone here. Okay, we have another supply zone here, but this supply zone here, this one here, is at an inducement level. This is just an inducement. All right, it is at an inducement level. But what happened? I think the price sweep the inducement, then now start selling. As you can see, the price literally swept the inducement. This was the high. So the price turned into liquidity. As you all can see. Let me zoom again so that you guys can see. Since market has taken out liquidity, the market can sell. As you can see, price turned this side to a liquidity, took it out, then now start selling. All right. So let's even assume that you are even selling from this side. This is another kind of thing entirely. Now let's even assume that you are selling from this side. Now let's assume that you are selling from this side. All right, let's assume that you are selling from this side. So if you place your sell limit here, normally, right, normally your stop loss is going to be above this high. All right, then you targeting this is going to be very low. Your risk reward is going to be very low. All right, so you can leave the trade and let it fly. But let's say on another way around, if you are rather selling from this or inducement leg, then you should let your stop loss breathe a little bit to the upside. All right, if you are selling from this side, you should let your stop loss breathe a little bit to the upside, or probably wait for price to do whatever it wants to do here first, then you can execute the trade. After you might have seen that the price has taken out inducement and has given you a confirmation again, you can just sell immediately from here. All right, then your stop loss is going to be above this high, then you target the external range liquidity. Easy peasy, no stress. So just stick to what works for you. Okay, it is not compulsory for you to sell from here, guys. Just don't rush the market. Okay, it is not compulsory for you guys to sell the market from here. You can actually wait for price to come back in, and if price is not coming back, just let it go. Just let it go. It's as simple as that. Just let the price go. You are going to always see entries, you are going to always see setups on the chart. So this is not the last setup you are going to take. So just let it fly, just let it go and wait for another kind of setup. All right, So that is just how it is. So let's see if we are going to see another kind of example. Let's see. Just look for a breakout. That's all you need. A breakout to the upside or a breakout to the downside. That's all you need. That's all you need. That's all you need. Let's see. Let me clear this. Let's see if we are going to see another kind of as you can see here. Let me show you one crazy thing right here. As you can see, we have a breakout here. Then I know other block, I know supply demand zone is going to be somewhere here, but it's not clear here. Let's go to 4 hours so as for us to be able to mark our supply zone clearly. Yeah, this is nice. As you can see, we have a breakout here. Then we have a supply zone right here. As you can see, this is a supply zone right here. Right here. So if you're that kind of an aggressive trader, like I used to say, if you were placing your buy limit here, your stop loss here, then you're going to be crashed out. Why? Because you did not wait for the confirmation entry. Can you see? Market will just crash you out like this. Easy peasy, no stress. Okay? So because you didn't wait for confirmation entry, I didn't mean you waited for confirmation entry like the conservative traders would do. You will not be crashed out like this. So let's see if you are going to see a confirmation here. Let's go to 30 minutes. Let's see if there is going to be a confirmation there. Let's see if there is going to be a confirmation entry right there. All right, let's just see if there is gonna be confirmation entry right there. I hope that side shows. All right, I think it is popping up already. That side is popping up already. Let's see if we are going to see a confirmation entry. Let's see. Let's see. As you can see right here, let me just zoom this out. As you can see right here, we are not really seeing a valid confirmation entry. Why? Why am I not seeing it is because I'm not seeing a kind of a liquidity sweep. All right, I'm not seeing a kind of a liquidity sweep. All right, you need to watch my liquidity video for you to understand what I'm saying. All right, so if you have not seen the video, it's on the channel. Go and watch the video of liquidity. You understand what I'm trying to say here. I'm not seeing any kind of liquidity right here, so I'm not going to be counting this as a valid structure. All right, so it's just a kind of unstructured, price actions forming together right here. So that is why confirmation entry is very, very important. Okay, so that is it about that. So all right, I think this video is okay for you guys to understand how to spot supply and demand zone. I think it is very, very okay for you to understand. Okay, so if you enjoyed this video to this side, just don't forget to like this video, share with your friends, let them enjoy this too, and don't forget to subscribe to this YouTube channel in order for you to get 1 or 2 technical analysis videos like this. All right, so thanks.